بسم الله الرحمن الرحيم. أعزائي الدارسين في برامج الدراسات العليا ماجستير ودكتوراه في المحاسبة، السلام عليكم ورحمة الله وبركاته، وأهلا ومرحبا بكم جميعا في هذا اللقاء الثاني عشر، والذي أشرح لكم فيه استخدام نظرية القيود في تنفيذ وتطبيق استراتيجية الأعمال في المنشأة. Hello, dear students. This video of session number 12 is concerned with illustrating the theory of constraints as an important tool used in implementing strategy. Most strategic initiatives undertaken by firms today focus on improving the speed of their operations throughout the cost life cycle, because speed can provide a competitive edge. Customers expect quick response to inquiries and fast delivery of the product. Shorter sales life cycles in many industries means that manufacturers are working to reduce product development and delivery time. In this unit, I will present one of the key methods used to improve speed, which is the theory of constraints, which is referred to as TOC. Before looking closely at theory of constraints, let us consider the issue of how speed is measured and improved throughout the cost life cycle. The measures are defined in different ways by different firms, depending on the nature of the firm's operations. For example, cycle time, or what is called lead time, is commonly defined as follows. Cycle time is the amount of time between the receipt of a customer order and the shipment of this order. Similarly, manufacturing cycle time is defined as the time from the start of production to the shipment of the order. This is manufacturing cycle time. Another useful measure is manufacturing cycle efficiency. Manufacturing cycle efficiency, which is the processing time in manufacturing cycle time. For example, if the processing time is 2 days and the manufacturing cycle time is 10 days in total, then the manufacturing cycle efficiency will equal 2 divided by 10, which is 20%. Manufacturing cycle efficiency separates manufacturing cycle time into the time required for each of the various activities. Processing, which are value-added work on the product. Inspection, materials handling, waiting, and so on. Most firms would like to see their manufacturing cycle efficiency close to 1, which reflects less time wasted on moving and waiting and inspecting and other non-value added activities. The theory of constraints was developed to help managers reduce cycle times and operating costs. Prior to the theory of constraints, managers often devoted efforts to improve efficiency and speed throughout the manufacturing process, instead of focusing attention on just those activities that were constraints or may be called bottlenecks in the process. Constraints. What is constraints? Constraints are activities or policies that slow a product's total cycle time or limit throughput. Theory of constraints focuses attention on improving speed at the constraints, which causes a favorable decrease in the overall cycle time and inventory. Theory of constraints can be compared to just-in-time manufacturing, in that both are aimed at reducing cycle time and reducing inventory levels. Just-in-time accomplishes this by methods that coordinate manufacturing processes so that materials are available just in time for the process, thereby increasing processing speed and reducing or eliminating inventory. Steps in the theory of constraints analysis. What are the steps included in the theory of constraints analysis? Theory of constraints analysis has 5 steps 5 steps. You first identify the constraint and then determine the most profitable product mix given that constraint. The theory of constraints is a system to improve human thinking about problems. Yes. It has been greatly extended to include manufacturing operations. The basic premise of theory of constraints as applied to business is that improving any process is best done not by trying to maximize efficiency in every part of the process, but by focusing on the slowest part of the process, which is called the constraint, or it is called the bottleneck. Increasing the efficiency of processes that are not constraints merely creates backup in the system. The steps in a theory of constraints analysis are as follows. First, identify the constraint. You have to identify the bottleneck. Secondly, you have to determine the most profitable product mix given that constraint. Thirdly, maximize the flow through these constraints. Fourthly, increase capacity at the constraint. And finally, redesign the manufacturing process for greater flexibility and speed. The detailed steps in performing a theory of constraints analysis are described below and on the next table. First, identify the constraint. As mentioned now, the first step is to identify the constraint. The bottleneck operation can usually be identified as the one where work in process backs up the most. A more sophisticated approach is to analyze available resources, such as number of skill level of employees, inventory levels, time spent in other phases of the process, and determine which phase has negative slack time, which means the phase without enough resources to keep up with input. Second step, step number 2, determine the most profitable product mix given that constraint. A basic principle of theory of constraints analysis is that short-term profit maximization requires maximizing the contribution margin through the constraint, which is called the throughput margin or throughput contribution. Theory of constraints thus helps managers to recognize that the product they should produce the most of is not necessarily the one with the highest contribution margin per unit, but the one with the highest throughput margin per unit. I mean, which means what managers must make the most profitable use of the bottleneck operation. Throughput costing, sometimes called super variable costing. It recognizes only direct materials costs, as being truly variable, and thus relevant to the calculation of throughput margin. All other manufacturing costs are ignored because they are considered fixed in the short run. So we can say that throughput margin equals sales minus direct materials, only direct materials. Let us have an example, simple example. Assuming that during its first months in business, a firm produced 100 units and sold 80 units while incurring the following costs. Direct, let us move this. Direct materials assumed to be $1,000. This item is called manufacturing costs used in super variable costing. Direct labor and variable overhead, both of these two items, if added to direct materials, the total of the three equals manufacturing costs used in variable costing. If we added to these manufacturing costs used in variable costing, if we added to it the fixed overhead, then the result is manufacturing costs used in absorption costing. So let us remember what we mentioned in study unit number 2. When speaking about methods of measuring costing or methods of costing, we have three costing methods. The old one is absorption costing, under which all the manufacturing costs are assigned to products. The second method is variable costing, under which only variable costs are assigned to products. The third one is that new one illustrated today. The third one is throughput accounting or throughput costing, under which only direct materials are considered costs to be assigned to products. They are termed as super variable costing. the impact on the financial statements of using one method over another can be seen in the following calculations. You should note that because throughput costing emphasizes so few costs as product costs, ending inventory and the cost of goods sold are in this method lower than under variable costing and much lower than under absorption costing. Cost per unit. If we calculated the cost per unit as mentioned in the previous example. Absorption. Under absorption method, the cost per unit is divide total manufacturing costs 7,500, divide this by the number of units produced, which were assumed to be 100 units. So the result is the cost, manufacturing cost per unit is $75. But under the variable costing method, we divide the variable manufacturing costs by the units produced, so the variable cost per unit is $45. Under the new method, which is called super variable method, dividing the manufacturing costs here, which we mean direct materials only, divide these costs by the units produced, so we have the super variable cost per unit as $10. This is the cost per unit under each one of the three costing methods. So under each method, the ending inventory is valued as following. Under absorption method, the ending inventory 20 units multiplied by the cost per unit 75. So the ending inventory under the absorption method will be $1,500. But under the variable costing method, the ending inventory of 20 units will be multiplied by the variable cost per unit. So the result is $900. And as for the super variable method, ending inventory will be calculated as 20 units multiplied by the super variable cost per unit, which was 10. So the result is $200. Below is a comparison of the calculation of operating income under two of these three methods. We shall apply for the variable costing and the super variable costing. The units, assuming that the units were sold at a price of $100 each, and the company incurred $200 of variable selling and administrative expenses, and 600 of fixed selling and administrative expenses. Note the dramatic reduction in operating income resulting from the treatment of so many costs as period costs under throughput costing. So, under the variable costing method, sales are $8,000, which is units sold 80 units multiplied by the selling price, which is 100 per unit. So the result is sales equals $8,000. We want to subtract from this figure the variable costs, variable manufacturing, and also variable non-manufacturing, selling and administrative. So we have to compute first beginning inventory, it is supposed to be 0, plus variable manufacturing costs. Under this method, the variable manufacturing costs only are computed as costs for products. The total is the same, $4,500. Less, we have to subtract ending inventory. The ending inventory is units not sold, which were 20, to be multiplied by the cost, the variable cost per unit. So the result is 9,000. Let us have a pointer. So variable cost of goods sold is $3,600. This figure should be added to the other variable costs in selling and administrative. Variable selling and administrative expenses, it is assumed to be 200. So the total of both variable cost of goods sold and the variable cost of selling and administrative, both of these costs should be subtracted from the sales revenue. So the result is contribution margin, $4,200. We subtract from contribution margin, we will subtract the fixed costs, all fixed costs, fixed manufacturing and fixed administrative and selling expenses. So fixed overhead, 3,000 to be subtracted, fixed selling and administrative expenses, 600. Both of these two subtracted from the contribution margin, the result is operating income, which equals $600. Notice that under this method, the operating income was $600 to be compared with the result which will be reached under super variable costing. Under super variable costing, we have sales, the same figure. Sales here is the same as under variable costing. So we deduct from this revenue, we deduct the cost of goods sold plus the variable costs if there is super variable costs. As we learned now, cost of goods sold can be computed by having the beginning inventory, which is 0, added to the direct materials costs, which we consider super variable costs. The total is 1,000. This is the super variable cost of goods available for sale. Subtracting the ending inventory, which was calculated by multiplying units of inventory to 20, multiplied by the cost per unit from the super variable, which is direct materials. This is the super variable cost of goods sold. No other super variable costs except this. Subtracting this super variable cost of goods sold from the sales revenue, we will have the throughput margin. Throughput margin equals 7,200. This is the throughput margin. But notice that the contribution margin under the variable costing was 4,200. Okay. Then we will subtract from this throughput margin all the other costs and expenses which were not considered super variable. Direct labor, it's not a super variable item. Variable overhead also. Variable selling and administrative expenses, fixed overhead, fixed selling and administrative expenses. All of these items are not super variable. So, subtracting these items from the throughput margin, we will have operating income as 100. It is a loss, not operating income. It is loss, operating loss. Comparing this result with the result in the variable costing, you will notice that there is a great difference. Here, the firm achieved operating income $600, but under this second super variable costing, the company is suffering of $100 loss. To determine the most profitable use of the bottleneck operation, a manager next calculates the throughput margin per unit of time spent in the constraint. Notice that profitability is maximized by keeping the bottleneck operation busy with the product with the highest throughput margin per unit of time. Step number 3. Step number 3 is to maximize the flow through the constraint. And step number 4 is to increase capacity at the constraints. In the short run, theory of constraints encourages a manager to make the best use of the bottleneck operation. This is in the short term, in the short run. But the medium term step for improving the process is to increase the bottleneck operations capacity to absorb more units. And the final step is to redesign the manufacturing process for greater flexibility and speed. This means that the long-term solution, that was the short and medium solutions, but as for the long-term solution, is to re-engineer the entire process. Re-engineering. The long-term solution is to re-engineer the entire process, which means that the firm should take advantage of new technology. Product lines requiring too much effort should be dropped, and remaining products should be redesigned to ease the manufacturing process. Value engineering is useful for this purpose because it explicitly balances product costs and the need of potential consumers' product functions. Let us now have an extended example for better understanding. As we mentioned now, we have to follow 5 steps in using the theory of constraints. The first step is to identify the constraint. Yes. Let us assume that a company makes 3 products, A and S and G. These 3 products are produced in that company. Under the current setup, the hours spent by each product in the 2 phases of the manufacturing process are as follows. So we assume that the process consists of 2 phases. Phase number 1 is assembly of the parts, and phase number 2 is testing the product after it has been assembled. And this column is for the products. We have product A, product X, S, product G. The company, we're assuming that the company has 150 hours available every month for testing. As for the testing phase, the hours available for this activity is 150 hours every month. Under the current setup, so under this operation, Therefore, the testing phase, this phase, is the constraint. We assumed that there is no problem as for the assembly. We have enough capacity. But the bottleneck is in the testing phase. So after we determined or identified the constraints to be the testing phase, so the second step will be to determine the most profitable product mix given that constraint. The company calculates the throughput margin on each product and divides by the hours spent in testing. As you see now, the price, we assume that the price per unit is for product A, the price is $200,000. And for product S, it is $600,000. And for product G, it is $300,000. This is the price per unit. We will subtract materials costs, which we considered super variable costs. Materials costs used for product A, for the unit of product A, is supposed to be $100,000. And for product S, it is so, and for product G also computed. Subtracting the material costs, which are super variable costs, subtracting these super variable costs from the price per unit, we will have throughput margin. The throughput margin for product A is $100,000 from each unit produced and sold. And as for the second product, the throughput margin is $200,000. As for the third product, it is $50,000. This is the throughput margin. We have to divide this throughput margin by the time consumed in producing this type of product. We will not make a choice, or we will not make the decision upon the largest amount of the throughput margin, not like under the contribution margin. In the contribution margin, which was illustrated previously, under contribution margin, we choose to produce the most profitable product based on the largest amount of contribution margin. But under throughput costing, we are not going to choose the product with the largest throughput margin. We have to combine this throughput margin with the bottleneck, with the constraints. The constraints in this example was assumed to be the time for testing. So we have to divide the throughput margin of each product. We have to divide this throughput by the time consumed to produce one unit. When producing and selling one unit from product A, we will have throughput margin 100,000. But this will be through consuming 4 hours. So we wanted to know the share of each unit of the constraint from the throughput margin. We use in this product 4 hours to produce one unit of product A. So these 4 hours produces 100,000 throughput margin. So if we want to calculate the share of 1 hour consumed here in this product, so divide this by the hours consumed, which represents the constraints. So 100,000 divided by 4, we will have what? We will have $25,000 per hour consumed here. As you see now. And as for the second product S, it gives throughput margin 200,000, but this margin is reached through spending or using 10 hours. 10 hours. So we wanted to know the share of 1 hour used in this product. What is the share of 1 hour from the throughput margin? Divide this throughput margin by hours used or consumed here. You will have each hour used in producing this product will give $20,000. So as you see, in comparing this product with product A, you will see that product A is more profitable than product S, because each hour, if the 1 hour of testing is used in producing product A, you will have $25,000 margin. But if this same hour is directed to be used in producing product S, this hour will not have more than $20,000. So using the time here in this product A is more profitable than the second product. And the same matter if we speak about the third product G. The third product G give $50,000 as throughput margin, and this amount is achieved through using 5 hours of testing activity. So we wanted to calculate the share of 1 hour of testing used in this product. Divide this by the number of hours, which are the constraint time. You will see that every hour used in producing product G will give the firm $10,000 only. So, which is more profitable. Which is better? To use the limited hours of testing in producing product A or product S or product G? It is clear that the use of these hours in producing product A will be the most profitable use. But but there is another factor to be taken into consideration: the market. We cannot direct all our limited resource, which is testing hours. We cannot direct and use all these hours in producing product A without looking at the market, regardless of the need of the market. Does the market can absorb all the quantities you produced? No. We have another determinant here. It is the factor. It is the market. The crucial factor in determining the optimal product mix is not which product is the most profitable product in terms of absolute throughput margin, which was the second product, S, but which one generates the highest margin per time spent in the bottleneck operation, which was testing the product. You should also note that to derive the most profitable product mix given finite resources, customer demand must be taken into account. The company has determined that it can sell 12 units of product A and 6 units of product S and 22 units of product G per month. Okay? So the available time in the bottleneck operation, which was 150 testing hours. This is first devoted to the product with the highest throughput margin. Then in descending order until the company is unable to meet demand. In the calculation below, which will be presented now, the hours remaining after assignment to each product are the hours which can be devoted to the next product. Let us see. As we mentioned, we have 3 products. We assumed that making marketing survey, we discovered that the demand in units in each type of products are as follows. As for the highest product A, the demand is 12 units. We cannot sell more than 12. And the demand in units for the second product is 6. And the demand for product G is 22. So, as the time consumed in producing each unit is in product A, the time is 4 hours. In product S, the time is 10 hours. In product G, we need 5 testing hours. So we will first devote our resources toward producing the product A. We will produce all the units which can be sold in the market. These units, 12 units, will consume 4 hours for each unit of these 12. So the total hours consumed in producing product A are 48 hours. And as mentioned in the example, the firm has 150 hours as a determinant factor. So when we use 48 hours to produce all the quantity required of product A, we will have the rest of this. We will consume from 150 hours, we will use 48 hours here in producing product A. And we will have remaining hours of 102. These hours, this capacity over excess capacity will be transferred to be used in the second product, the second descending product in its profitability. So this second product needs 60 hours to be produced. So using 60 hours from the excess capacity here, we will produce all the units of the second product, and after producing, we will have excess capacity remaining of testing, which equals 42 hours. These 42 hours will be directed to be used in the third product. The third product, if we wanted to produce all the 22 units required as a demand, we will not be able. We are producing units consuming 42 hours only. And if you wanted to produce all these required units, you will have a shortage of testing hours with 68. The third step is to maximize the flow through the bottleneck operation. You have to maximize the flow through the bottleneck operation. The company will ensure that the bottleneck operation stays busy on high products while keeping work in process inventory to a minimum. Step number 4, to increase capacity at the bottleneck operation. The company will hire and train more employees for the testing department if it wants to produce all the units of the third type product. And finally, step number 5 is to redesign the manufacturing process for greater flexibility speed. That means the company will examine its markets through market survey and the new manufacturing technology to determine which products it wants to continue selling, whether to add new ones, and whether to retool the production line itself. Theory of constraints analysis complements activity-based costing. Why? Because they focus on different aspects of process improvement. Theory of constraints has a short-term focus based on costs of materials and product mix. But activity-based costing has a long-term focus which considers all product costs and is concerned with strategic pricing and profit planning. Theory of constraints analysis, unlike activity-based costing, decreases the issues of resources constraints and operational capacity. Theory of constraints ignores cost drivers, focusing mainly on process time. But activity-based costing requires defining cost drivers in every part of the organization. So we came now to the end of our session, and not to forget to thank all of you